Hey everyone, welcome back. My name's Levi Woods. Today is April 1st, and no April Fools today. We're into just regular stock trading stuff. That's how I am, it's straight up. I don't offer financial advice in any way, shape, or form. It's just my personal opinion, what I'm doing, what I'm looking at. I would love if you're watching to just chime in, let me know in the YouTube chat where you're watching from, and take a minute to say hi. Helps the channel a ton, helps those algorithms. And if you want, drop a comment as to which ticker you'd like me to look at. And I would love to be able to join that. I'm trying to reach forward so I can see what's going on my screen. See, there's a couple people online, which is fantastic. And just throw out some tickers. We're going to do some just really, really basic stuff. We're going to look at what is going on in the market. And my screen is not working. That's fantastic. I was having a buffering issue. Just give me 1 second. Okay, that should be a little bit better. Let's get into this, clear that, do this. Let's take a look at the market and what it's doing. We're on the 1 minute chart on the S&P 500 in the top right corner. We've got the 30 minute chart down here. Looking at a point of control, which is a little bit higher than the current value. I don't know, are we seeing a sell-off into the end of the day? This is, I'm Pacific Standard Time, so we've got 2 hours left in the market. You know, a little bit of a sell-off past the VWAP right now. NQ futures coming down right to their VWAP level. Are we seeing this on volume? Not surprising if we look at the volume profile that there's not a lot of volume in this area. So these moves tend to be rather quick, which means that if the NQ futures drop, we'll see some consolidation around that 19,400 level. If we take a look at the SPX over the last couple of days, there'll be quite a bit of volume near the close from yesterday. So, and then this morning, pretty lightly traded into this slight sell-off this morning. So, point of control is still sitting above. We're in a range where we definitely could see a drop down. And we could see some speed with that. When, you know, tomorrow's a big day, we get to see the full impact of the tariffs and what's going to happen. So we just don't really know what is going on. I see Jamie's got a question. He says, what's up, Levi? Can you let me know what your position approach is on TNA? I know you have a long position, but it seems to be getting its butt kicked. Are you using it to get premium with covered calls? I currently am not adding to that position, nor am I collecting on my covered calls. One of the issues with Russell, so let's just take a look at the Russell in general. Now we know that, here, let me just change this. Let me just change this chart. Sure. So on the Russell, which is the Russell 2000, one of the things that happens with small caps is that they are quite susceptible to interest rates. So, and they're susceptible to inflation. When the market is not in a good place, we can see some rather large channels to the downside. So if we look back at 2022, if we were to just kind of draw some lines on here to show kind of the channel that it traded in, the market traded down for quite some time. From the peak, we were looking at November of 2021, and then to the first bottom, we're June. So we're about 7 months. Now, if we were to extrapolate that data, if we were to take a look at November of 2024, then we would expect that channel is going to be similar down to June. Now you can see the steepness is a little bit different. It's actually a little bit steeper. And part of the reason that I am not currently selling calls against these positions is because of this steepness. We often see bounces off of certain levels. And when we look at the Russell, you can see this blue line that I've drawn on here. This is the bottom of like a descending wedge here. So there's a bit of support here. And the question is whether or not we're going to fully break through this or not. Typically in this type of market action, it's not unusual to see moves up. Now, TNA is a triple leveraged fund on this. probably not a good time for me to be holding, but the premiums are pretty rich, and I'm of the mindset of that if it goes down, I haven't locked in a loss if I don't sell. So these are long-term positions that I plan to hold for a very long time. Now, is it going to potentially be a terrible return long-term? Without the covered calls, it is. But I plan to continue to sell covered calls. I just want to do it at the opportune time. So when I'm looking at a chart like this, if we see a bounce, if the market recovers up to this level, or especially to this line, where I'm going to be taking that position and taking a look at it and saying, oh, I've moved my line there accidentally. Here we go. Let's move that back. I'm going to be looking at deploying some covered calls. Conversely, I sold off some TZA, which part of the reason that I hold this is because it takes some of the sting away from my TNA positions, but this is a timing thing. You know, what I'm doing is I'm playing the market. So I'm looking at this, we're seeing a double top. I was able to get out of some TNA positions yesterday and liquidated a portion of my portfolio. When TNA goes down, TZA would go up. So they are inversely correlated. I feel like I've made the right move. I feel like we're going to get a bounce. TZA is going to drop. TNA is going to go up. I am going to sell covered calls against TNA on this bounce. I am going to use that money to buy back into TZA and therefore re-engage my hedge. So that is kind of my approach long-term. Now, with these particular things with TNA, my goal is to accumulate as many as possible. I do not want to be in a situation where I am ever selling these. The drawdown is relatively little comparatively to the amount of premium that we can collect. But with covered calls, what we don't want to do is get ourselves in a position where we're only collecting 1% and then having to roll that out when we can just be a little bit patient, wait for a tiny move, and then not be in a position where we're rolling. So that's kind of my end game with that position is hold the TNA forever, be in and out of the TZA as a hedge, sell the covered calls to reduce the depletion of the cost of carrying TNA, if that makes sense. So that's kind of where that is. And if we look at the TNA chart, it does pay like 30 cents per week. So it's pretty wild if you're close to the money. Let's just say that it did rebound. Say you sold like a 34 call, which is possible right now, or like a 36 call. Well, you're getting about 30 cents for that. So even if it went up, like say it recovered and you did have some calls on, then we get to make 30 cents a week in premium. It's relatively easy to chase this back up. I never chased it up to these highs of 57. I mean, I played mid-range with it and I stayed kind of in that 40 level the whole time. So it's not down all that much for me. The position overall is quite profitable, even though all of the shares that I own are currently under the value of my purchase price. It's just the cash flow that I've gotten from them has been extremely good. So that I'm not leery about trading the covered calls. I just want to make sure that I'm trading them on an up move. And I think that there is up moves in this market. You know, this morning, even if we had looked at if we looked at the Russell just in general, if we looked at the 1 minute chart on this, let's go to the 1 minute, you will see that the Russell was actually positive. So we opened here, we were down for the morning, and then we were positive. TNA was up, you know, 3 times the amount. So there is a little bit of timing to be had, but this is a whippy market. So we have to choose whether or not we're playing kind of like really low delta positions way out of the money, and we're looking for that theta decay that occurs in a high VIX environment, or we have to be very strategic about how we're playing. Now, the VIX is probably the next thing I want to talk about, because NASDAQ's flat, SPX is slightly down, Russell's down 0.6%, and as I said before, it's actually was up earlier today. But the volatility index is still 22. Now, volatility can climb, and I believe that this climb that we've just seen right now is in the last couple of days is in response to what's going to happen tomorrow. So this is, we're looking at, I'm trying to draw something on here it's interesting. It looks so similar on the 1 minute to the 1 day, but this should be 1 day. So let's go to 1 day and look at and see exactly what I was drawing there before, which is this smaller movement relative to the last daily moves up to it. It's interesting how you can zoom in on a chart and see very, very similar attributes to what's going on. But on those different timeframes, the same action has been occurring. As we approach tomorrow, we are getting more volatility. This volatility should completely retrace tomorrow once we find out what exactly is happening with the tariffs. They're either in place or they're not. And so there might be some lightening of them. If there is, the VIX will drop, the S&P 500 will shoot up. If there isn't, the VIX is going to drop anyway. So it's a good time to sell premium. Probably not a good time to be in diagonals because the longs are going to lose a lot of value. So playing, limited loss trades and trying to stay in a position where we're range bound. What else do we want to look at? US oil's at $71, been on a climb. We talked a couple of weeks ago about this level being a good buying opportunity, just because we have support down at these levels, and that's pretty typical of oil. It does stay in a range. We're approaching the 200-day moving average, but we could easily go back up to $80 depending on what is going on. Oil always has an upside risk. So for those that are playing oil, looking at this level around that $66, $65 range, and then that upper level being like $80, it's fairly typical range. We're into the middle of that now. So those long duration strangles have been playing out quite well, leaning more bullish when we're down in these levels and leaning more bearish when we're here. So gold continues to climb higher. No surprise. I took off all of my upside risk. My patrons know that. The expectation is that we're going to continue to see rising prices in gold, and silver is behind. So if we're looking at that in particular, it's like, should the market be going up more than it is relative to gold? I would expect so. I think there's opportunity here, bullish opportunity in silver. We're still not at all-time highs. Natural gas trading at $3.95. I don't love playing natural gas. It moves too quickly, but we've been definitely in an uptrend this year. And then looking at some of the stocks, we've got Apple trading down in a consolidation range. AMD has kind of found its footing right above that $100 level, and I would expect to see some sideways movement in that. ARK-K has had a sell-off from the highs and has kind of caught this position. I was a bit surprised it dropped down quite as low as it did, but my expectation is we'll trade closer to this green line. So a little bit of up in ARK-K, just because Kathy Wood is she's pretty aggressive. Adobe, I've got some positions on some of these that are just like bull put credit spreads, way out of the money. Nice, long, slow trades, low risk, easy profit taking, easy. I don't want to say easy money because it's not easy money. We still have to pay attention to it, but at least looking at those positions and saying there is an easy exit plan. So when we're playing something simple like a bull put credit spread, it's like the credit collected, exit at 3 times the credit collected. So we have like a 2-to-1 loss ratio. And if it plays out, then it's great. And when I'm doing these types of trades, like say I was to look at a bull put credit spread, what I would do is I would look back at previous support. So on Chewy, I might look back and say, okay, where are we trading? Are we trading at a good level? I want to enter on a down day and looking at this level and saying, can I get a decent credit of around 20% or higher on the total risk, and then playing that position out, in that somewhere between 1 and 6 weeks, typically a little bit on the longer side. So doing those kind of closer to 45-day duration, making sure that we're getting a lot of extrinsic value in there, and then watching it play out. If the market rebounds, those become quick winners and we get to take our profits, and it's nice and we can just redeploy that into positions. I like to play those across a range of stocks. Now we're getting into positions where we have to watch earnings. So 45 days away, we've got earnings coming up on Robinhood. We've got Meta reporting earnings. on April 23rd. So these are positions where I wouldn't take a spread because it could jump over on that earnings date. So we do have to pay attention to that. And that's why I was mentioning ARK-K, because it's an ETF. There's no actual earnings report. They just buy and sell stock each day. So it's actually a good time to be into those types of things. What else do we have here? MicroStrategy has been bouncing off the 200-day moving average. Earnings coming up on May 6th. So that's getting within that 45-day window. If we do see a retracement and we hit this 200-day moving average, it might be a good time. There's lots of premium MicroStrategy. Might be a good time to play these bounces and play those bull put credit spreads. I doubt we're going to see a rip and high, but something like MicroStrategy could go up tons with the likes of Bitcoin. Are we going to see these highs again? Likely not. You know, not this year anyways. This is... the economy just everywhere seems to be down. I don't know how you guys are feeling. Let me know what you're thinking of the people around you. Are you feeling that everybody is thinking that the market is going to continue to crash? Are people getting tighter with their money? These are the types of things that I'm trying to look for in the market in general. I check the housing market quite closely actually, and it's one of the kind of forward indicators as to what is going on. And right now where I live, there's actually quite a few houses coming onto the market, and the houses that are currently listed are dropping in price. This is generally not a good sign for the economy moving forward. There's a lot of political strife right now too as well. So I expect in Canada, we're going to see decreased interest rates. I'm not sure what's going to happen in the States, but the likelihood is with the tariff implications, we're going to see some inflation continue. Whether or not this inflation is going to be priced into the stock market now or it hasn't yet been, it's hard to say. Like when I look at a stock like Meta, you know, they are a huge cash flow generator. And this price from 740 down to 555. I mean, if we were sitting back in February and saying, wow, boy, I really missed the boat. I wish that I could have bought a Meta when it was cheaper at $555. Wouldn't that have been nice? Because that would have been last November. Well, we're suddenly at those prices. We're seeing those levels that we haven't seen since November. Are we going to see these levels from September? Quite possibly. Are we going to see a recovery in this? Eventually, I would expect that we will, only because companies like Meta have just a huge amount of cash flow. So unless something dramatically changes, it's likely that these will continue to go back up. Now, something like Netflix may not. It has a harder time. But a company like Amazon, people are buying. People are buying in general, consumers. And whether or not consumer spending dips, eventually it will come back. And these companies like Amazon, well diversified, they've got their digital component, they've got their shipping component. It's a very lucrative business, and these are like on sale prices. So when I look at these support levels at $180, and I'm looking at a stock that's trading at 187 that was trading at 239, this is a significant pullback. And we're getting to levels where I think that there's people out there that are going to start deploying capital into these funds. And I think that that's a good time to be considering doing like bull put credit spreads, because it's simply it's a bullish position on a stock that's beaten down. Now, if I look at Baidu, Chinese stocks and global stocks in general have been doing a little bit better. If we look at this recent channel, boy, my phone is buzzing like I wouldn't believe. If we look at this recent channel, I gotta turn my phone off. What is going on here? So I'm going to, if I'm looking at this channel, definitely in an up move to the upside. And whether or not we continue to see that, we don't know. Am I buying and going long at these levels? I'm being a little bit questionable about that. I would be setting my any bullish positions with a break even around that 85 level where we saw previous support. The other thing to do is watch volume on these. When we see these large moves if it correlates to large volume, like on this day where we see a large volume candle and a large move to the upside, that's a significant market move. And then we saw the volume kind of peter off, and now we're seeing a low volume period. So what I would expect to see here is a little bit of consolidation to one side, and then we'll pick a direction one way or the other. I would be waiting for a little bit of a leg down to break outside of this channel, or at least touch it, and then I'll look for that move to the upside, because I think things are bouncing right now. What else can we talk about? Do you guys have any other tickers you want to look at? Tesla, another one, totally beaten up. I mean, I think that with Tesla, we saw like an unrealistic price action above, you know? So if we ignore all of this noise and we kind of look at the stock at more of a position and say, well, where was that kind of midline around that 200-day moving average? You know, let's not pretend that the stock was at a correct valuation when it was at $480. Does this mean that it can't go back above 400? Absolutely not. It could easily go back up. So I don't love to play with a bunch of upside risk on Tesla. And what I might do is take a more neutral stance on a stock like this, knowing that it's got a pretty substantial range that it plays in. So I can go way down here to the 200 level, and I can look back and say, okay, there's support at, you know, the 185. There's some support at 203. I'd probably be more inclined to play this 185 and see if I can get some premium down here and play those slightly longer duration trades, deploying a limited amount of capital and with no upside risk. That way, if it goes up, we have the chance of making some money. And if it kind of grinds lower, we still have a pretty good chance of making money. That's why in a high VIX market, I like those trades like a bull put credit spread. I like to be a little bit bullish when other people are afraid, but I'm also not silly about it. I'm not trying to buy something that's way above the current price. Looking at something like PayPal, obviously, again, we're talking about how much valuation was realistic here in the last portion of the year. We saw this exponential growth, and it was out of line with the 200-day moving average. So if we were to look at a company and say, okay, you know, we saw this out of line growth in 2020, and does it surprise us? Just clear that up. Does it surprise us that we saw a retracement? And then after that 2-year period, you know, this was a long time. There was a lot of money being pumped into the market at this point. And once we got back to a normalized level, is this a more appropriate valuation for a company like PayPal? And it seems to be. You know, when we compare these outlier moves, we now have to look at a range that is closer to home. So we kind of zoom in and say, well, what has it done over the last couple of years, and where is it going to go? I mean, do we expect this stock to go to the absolute moon? Not really. You know, I want to look at this and say, you know, in all likelihood, it's going to stay kind of in that center range, and I want to try to make money off of it. The very few times where it's touching out are times where we should be considering going bearish. And when we're getting down to the bottoms of these levels, we'll watch our like MACD levels, and we'll watch our RSI levels. This is a volume weighted MACD level. And we can see that we're at a zone where this is indicating a buy. You know, and last time that we saw, if we look at this dip, what happened? Well, we saw an up move. If we were to correlate this point in time with this low, once it started to move, that was a precursor to this up move. So if we see a little bit of a further down move, we will see this dip again, and then we should see a bounce to the upside. And that kind of correlates to that, you know, this box. And I'm basically drawing this. I'm not being willy-nilly about this. This is looking at these lows where we've seen support before. 1, 2, 3, 4, 5, 4 times here, and almost at that level here. The only time that we saw it was right in November of 2023. We saw a little dip, and that was earnings obviously saved that. We had positive earnings and the stock went back up. So we have earnings beats. The green ones are beats. Misses, we see the stock fall quite a bit. This miss, not so bad, but we've had three earnings beats in a row, and now stock is trading below its 200-day moving average. I think that there's potential bullish opportunity for the market to move up on stocks like this. Walmart, obviously, with inflation being high, this is going to increase their cost of goods, but is it also going to drive more customers to them? So the stock has pulled back, but you'll note it's already on a massive upswing. So Walmart, a very, very strong company. And, are we looking at an opportunity to buy this position? For that kind of thing, what I like to do is just zip over to something like a service like Seeking Alpha. And what I can do with this is I can get a valuation grade. I can use this to say, well, the valuation is still an F. The calculated value is not that great at this point in time. It's profitable. We know that it is. Is that profitability going to reduce? Possibly, because the inflation is going to increase the cost of goods. But is it going to kill their business? Probably not. But we're looking at it from a stock trading perspective, which is, do we think there's a bullish momentum? Well, the momentum is actually pretty good from a long time back, which we just looked at. But the growth is stagnant. So the valuation could come lower. And that's why I would deploy or look to deploy strategies like something simple as a bull put credit spread and say, you know what, in all likelihood, it's not going to trade below $80 and we're trading at $88. Can I put on a trade for 45 days that has a short put at $80 and a long put at say 75? And can I collect $1 for that? Getting 20% return on my capital. If I'm really leery about it, what I'll do is I'll build that into a butterfly and I will buy some sort of smaller spread in front of it, make a broken wing butterfly. That way, if it moves down, I can sell off the bear component spread and I can roll out in time the bullish component, and I can hopefully roll it down to lower strikes and collect a credit between selling off my debit spread, my bearish position, and then rolling out in time of my bull put position. I can often neutralize a losing trade. So we're seeing an opportunity here that I think is appropriate to start laying on trades. And you can see that my patrons saw that today. Was it yesterday? I think it was yesterday. I put on, maybe it was Friday. I put on like 4 bull put credit spreads in a row. And these are all relatively low delta, trading around that like 20 delta or lower. I don't want to get too much lower than that, otherwise I don't get any premium, and a defined risk. And right now I'm not really playing with those bear hedges at all. I'm just putting on the spread and we'll see what happens. John Blake says, happy Tuesday. Happy Tuesday to you. See, there's 2 likes. We got 11 people. Who is on? I would love to know. Who? Type in the YouTube chat and let me know. I know I've been kind of on a roll there, letting you guys know what my thoughts are. Just in general, we'll continue away, but would love to know if you have some specific stocks you want me to look at. I've got Seeking Alpha loaded up. I can take a look at that and we will see what is going on. I also can take a look at Bitcoin. I don't often look at Bitcoin here very often, but Bitcoin pricing has retreated, but boy, continuing on this is Bitcoin versus US dollar, continuing on this upward momentum, seeing this consolidation around that 200-day moving average. And again, looking at the MACD, like one of the reasons I use this particular indicator is because it shows me opportunity times where there might be a bounce. So anytime I'm seeing these low lows, which is what I'm looking for, like these really low spots, that it might be a time where we could see a bounce in the price. And it often correlates. If I was to zoom kind of out on that area, you'll see it indicates it quite well that when we're down at low levels that we haven't seen in a long time, there's opportunity for the price to rebound, and then we often see that. So, technical indicators, part of this is algorithmic trading, right? Because these indicators are showing that this is a possible buy range, and what happens is bots start buying, people start buying, and it drives the price up. So we see that, and we see it with almost all positions. Like if you were to look at the low point here, this wasn't even that low, but it was indicating that there was a time where we might see an inflection point. We saw the stock Baidu rise from $81 up to $95. So it's quite a move when we see these low points. Now we have to be paying attention to are we waiting? Are we waiting till it crosses? That's fine. Can do that. can wait for a little bit of a economic indicator. Right now on Baidu, we're in a bearish signal. So we're above that volume weighted profile. So when we're looking at the trend, you know, something like Amazon, we're about to cross here again. This is an indicator that we could see a bounce. Chewy, you know, we were at these low levels. This was on last Friday, so this is a week ago. We saw this bounce, but you know, overall, in general, I would expect that we'll see some sideways to potentially upward movement in these positions. Watching from Cancun, that's amazing. I hope you're enjoying the beach. I love Cancun. Boy, it's gotten busy down there, hasn't it? Like, I used to go to Cancun. I think the first time I went was like in '97, and it was, you know, 30 years old or something at that point, because Cancun was basically built in the 70s, but it's like astronomically changed, you know, that whole area. You know, when you were in like Tulum, it was way out in the jungle, and now there's just like resorts right up to it. It's crazy. It's a wild area. I love it. I love Mexico. It's one of my favorite places. Shamal says, I have a QQQ put debit spread 480, 450 and a call credit spread 510, 515 for May 30, up 32%. How do you manage such a trade? So put debit spread 480, 450 and a call credit spread. So both bearish. Well, the question really becomes where are you thinking that it's going to land? So May 30th is quite a ways away, so there should be some decay. Let me pull up QQQ here, and we'll take a look specifically at the levels. And so we're trading at 468. The call credit spread's at 510, so it's out of the money and well out of the money. And then the put debit spread is almost, well, we're halfway to max profit. The 450 is down here, we're the 468. So your deltas on the put debit spread are about 50 delta, because you're right in the middle. So we're 20 points below and 20 points above. So 18 points and 12 points. Yes, we're in the middle. So currently the position is overall negative delta, which is, if that's what you want, then that's a fantastic position to be in. Now, the MACD level here is actually showing that we could be moving up into a slightly bullish scenario. This may be short-lived. You know, the trend is to the downside right now. The market sentiment is to the downside. So the question is, how do you want to leg out to it? With those positions, the call credit spread is still generating money. It's not very wide, and it's in a nice range outside of the position. The bull portion, or sorry, the bear portion, the put debit spread, the 480, 450, is basically creating a position that is not having much decay, because the options are equidistant from one another. So you have one option that's short, that's decaying at a similar rate to the option that is costing you money. So really, it's a directional trade. If I was in this position and I thought that the market was going to rebound from this level, what I might do is I might consider closing the whole position, because both of those would be our short delta. If I think the market's going to go down, then I would close the, I wouldn't close anything if I thought it was going to go down. And if I thought it was going to go neutral, I would be okay with that position, because the likelihood is that these two positions aren't really costing us any money, because we've got one at 480, one at 450. And so the theta decay on that is rather neutral, and you have a slightly positive theta decay from the call spread above. So overall, fantastic trade. Congratulations. That's awesome that you have that on, and you know, not really a ton of risk on that. You're just basically, if the market does do consolidation to the side, you're not making or losing very much. It's just kind of a neutral trade at this time, and you're looking for a down move. If you think the market's going to move back up, then closing it for profit now would be great. In the case of having multiple contracts, sometimes it's good to leg out. So if you're in a position where you have multiple contracts on, just close some of those contracts and then look for a new position that you might put on. But May 30th is still quite a ways away. That's we've got how many days? Well, we've got basically 2 months. You're 58 days or so out to that. Any other questions? I'd love to get some more questions in here. That's a great question, by the way. That was I like when you guys put those details in. What do I have? I would love to just throw me some tickers if you guys don't mind. That would be great. No. Otherwise, I just run out of things to talk about. We've already talked about things that I put on my list specifically to talk about. And if we have some tickers in here, I would love to talk about them. Who's making money today? Why don't you guys tell me that? Like, IWM is down 0.7%. QQQ is down 0.2%. SPY is down 0.4%. My account right now is showing me at 0.002 to the positive. So very, very slightly positive today. But this is because I'm kind of, stalling out at delta neutral and trying to keep myself in a position where I can hopefully make a little bit of money and still lean a tiny bit long for the bounce that I think is going to happen. And then once that bounce happens, I'll be able to kind of retrace some of these positions and kind of adjust again. But as I said, the ones I'm putting on now are a little bit longer duration, and we're playing lower than the current prices and keeping that kind of neutralized range on from the outset. Shaimel says Canadian index is holding up better than US. Do you think the tariff is making Canadian equities better? I think that probably it has much more to do with the I say much more. I think it has a little bit to do with the Canadian dollar US dollar differential that is happening. The US dollar is dropping, right? So this will automatically make the Canadian equities seem a little bit better than the US equities. But the Canadian index in general, I mean, our economy as a Canadian is not that great. I would love to sit here and try to sugarcoat it and say, oh, well, we're fantastic. But we've had reduced, we're reduced mining, reduced forestry, reduced oil and gas, reduced hospitality, looking at potentially reduced auto parts. And this is over a way longer period than I'm not talking about this year. I'm not blaming it like the current administration. I'm just saying over the past 50 years, we've been declining in those areas. We haven't had a lot of new infrastructure going in to like really up the game and up the amount of jobs and output the Canadians have had, or the Canadian economy has had. Our GDP growth has been the worst of any G7 country. So we're at the very bottom of the list according to growth. If you look at the metrics, it's actually abysmal that we operate in the way that we do. And this is not, again, I'm not blaming our current politics. I'm saying just in general, over my whole lifetime and prior to me, we've been in a slow decline and not leaning into the resources that we have here. We could be a very economically strong country, and our politicians have decided that that's not where they want to go, and we are, as Canadians, we suffer from that. I have not for a long time invested in the Canadian economy, and I'm very, very thankful for that. The growth that I have seen being on the American side has been exponential relative to the Canadian side. And so as a Canadian, when I see firsthand what happens in communities and what is happening moving forward, I don't even know if we can shift out of this. So I think that right now, when we do like a global comparison, if I was looking to place my money outside of the US, I would be looking at places like China and India, and not looking at Canada, just because we have no potential growth. I don't think we even have it. I don't think we can do it. We don't have the population, and it would take so long for us to change the rules in order for us to get there. Right now, we live basically on taxes, which is terrible. Anyways, that's about all I'm going to say about that, because it's a heated topic for me. It's I wish that I love being Canadian, and I wish that our economy was stronger and that our politicians made better choices. But my belief is that they don't make very good choices economically, and as a taxpayer, that's hard. Guitar Guy says, I just got here. If you swing trade option trades in your option, how long should you hold a trade? It depends on how long the duration is. So if you're obviously swing trading something like a 0 DTE, the decay is a massive in like theta decay. If you're swing trading a spread, then there's a little bit less decay, because there's two options. There's one losing money and one making money. if the trade is a long duration, like a leap, then you're looking at a directional move anyway, so you can hold that much longer. So it's a bit of a loaded question. Maybe be a little more specific about if you're swing trading with options and you are buying contracts that are 5 days to expiration and they are 30 delta or 20 delta or 60 delta, how long would you hold those trades? Most people that swing trade with options, I believe, are using spreads. So you're using like a delta directional trade where you're doing one trade that is making some positive theta decay, one that's making some negative theta decay, and then the two of them work together to give myself a delta position. That's how I like to trade it. Jody says, have you made any progress with the automating of any of your strategies? I was working on it last night. I'm working with a friend. We're building a ground up process of like I guess it's going to be web-based at first, but then eventually there may be an app. The idea is that what I want to do is be able to take some of my trades that are super repetitive. Say we're doing like a 21 DTE butterfly, and we know that we're going to try to put this on every Thursday. What we would be looking for is for whether or not the volatility is up and the market is down. We would be looking for a delta range on our short strike, and then saying, can this trade be put in as an automated trade so that we have everything functioning at the click of either one button or a few buttons, where we say it's Thursday, rut butterfly, if these parameters. And I would love to have that. So if there is a service out there already that's built, I mean, I'm a spreadsheet builder, I'm a trader. Getting into this type of automation is something completely new to me, which is why I'm working with somebody that is like on the tech side. He's a professional. I'm the trading component of it, and we're working on it together so that I can say, okay, well, here's the type of trade, here's the parameters, entry parameters that I would be looking at, and then what can we do moving forward? And hopefully that will result in a really great product. We'll see how it goes. And last night we sat down for a couple hours and we made some major progress in just kind of looking at the GUI on it and saying, okay, how can we actually take this data from our interactive brokers, which is what we're trying to do, is make it web-based so that it automatically connects to interactive brokers. And then once we get all of that data kind of showing correctly, then we're going to start doing some data collection and then moving through and say, can the system start to pull some of these trades? And we're going to start with very basic things, like I said, purchasing long butterflies, things that don't need active management. They just are going to be a trade that we put on. It has limited loss. We hold the expiration and we just see if those algorithms can run. And then if it can, this is going to be something that I'll be able to post out and then share with my members. So it's going to be an exciting time. We're hoping to have like a working demo of some data collection by this weekend. So it's coming along very, very quickly, which is great. And then we'll be a couple of weeks at least to do some data testing. And then hopefully I'll be able to do some live trades. My goal is to have some live trades implemented by the end of April and actually be putting some money towards these, because I have trades that I put on, like today wasn't a day to enter them, but they're very specific. It's like, if this, then that, and they're super simple for a bot to do. So why am I sitting here doing it manually? I don't know. We're trying to get away from that. I'm trying to clear up some time in the day while we can make some money. Guitar Guy 1989 says, when I buy an option contract, I like to buy in the money contracts with delta between 60 or 80. Okay, that's pretty normal. So you're just buying a contract, you're buying a 60 or 80, and then are you setting a profit taker? Or are you doing a stop loss on that price? Or are you, either one. Like, are you bracketing those? What's your expected return? And what's the duration? So from what you're saying, I'm assuming you're buying somewhere between 5 and 30 days. I don't love to hold option contracts all that long. I'm a little bit more complex trader than that. So when I want to be long deltas on a position, what I typically do is I will sell 2 shorter duration positions, and then I will buy 3 longer duration calls if I want a bullish position. And then what that does is it gives me 0 theta decay. And so if I'm wrong and the market just moves sideways, it's not costing me to hold. Because one of the problems with being an options buyer is that we can eventually lose out on money because we've just waited too long. We were eventually correct on the market move, but we just didn't do it in a timely enough fashion, and the decay killed us. I do some trades like a strangle straddle swap, and they are very difficult to fight that way because there's constant decay from my longs, and then there's much more rapid decay from my shorts because they're shorter duration. But then if the stock moves out of the range, it can cause problems to one side or the other. So I wish there was like a trade that was so dead simple that we could just like set it, forget it, and be done with it. And there isn't really one. I think the market moves so much. We have to be a little bit, fast on our feet to be able to say, let's jump into a trade here. Here's opportunity. This is what we're going to do. And then make sure that our setups are really right and not just try to do like a regimented entering of a trade, on a systematic basis. I don't think that's the way to make money. I've had more success being really specific about my levels and saying, okay, I'm entering this because we're at this level. And that's what I showed you in the first part of the live stream. So if you are watching now, I see there's quite a few more viewers on, but if you're watching now, you should go back to the beginning and watch and say, when I reviewed some of those charts and said, here's the technical analysis that I'm using to look at these and look at those trends. I'm going to call it today. You guys are amazing. Thank you so much for joining me. If you're not already a patron, you should head over to patreon.com/drawbridgefinance. You can join the free Discord. Obviously, I have a members only area as well where you get to see all my trade alerts. You get to see all my real-time trades and things like that. We also do the Thursday live stream for members only, where we do like portfolio review and we look at those positions. Guitar Guy says, I've been holding them for around 2 weeks normally, but I feel like it's not enough time with today's stock market conditions. I don't use stop losses because I'm not sure how to use stop losses correctly just yet. Yeah, that makes sense. It's fine not to use them. You can use like a mental stop loss, and obviously you're holding like a longer duration position. I think the biggest factor that you'll look at, especially coming up over the next couple of weeks with earnings, is that volatility is going to be a high potentially on specific underlying. So when I'm buying options, what I don't want to do is buy when the volatility is too high. I want to look for opportunity when the volatility is low. Tomorrow, when the volatility drops, which will, the prices of most of the long options are going to decay quite rapidly. So tomorrow, for any long positions, are going to see quite a bit of a dip, regardless of movement. Now, if the move pushes them in further in the money, that's a directional component. We're talking about the volatility expansion or contraction rather than the market move. Those are two different things. You guys are fantastic. Thank you so much. Let's get rich together. Take care.